Another day, another story. As an older adult, there are several ways to reduce your tax bill, starting at the age of 50. Be sure to take advantage of larger retirement account contributions, higher standard deductions, higher tax filing thresholds, and more. Did you know that several medical expenses are tax deductible? Visit our guide to healthcare and medical expense tax deductions to learn what other deductions you might be missing out on. Everyone wants to keep more of their hard-earned money. Luckily for seniors, many of whom are on a fixed income, there are several ways to save on taxes. With 1 out of 3 seniors aged 70 to 79 having saved less than $100,000 for retirement, every deduction counts. A good way to make sure you aren't missing out on deductions is to get professional guidance. There are free tax preparation services available to seniors through the IRS and AARP. Also, those with an adjusted gross income (AGI) of $73,000 or less per year can file online for free using one of several tax software providers. These online providers and IRS-certified volunteers can answer questions about senior tax perks like the ones below. When you turn 50. Larger IRA contributions. Those age 50 or over can contribute $1,000 more to their IRA, making the maximum contribution for the year $7,500 in 20232. For a traditional IRA, these contributions act as a tax deduction. Also, once you reach 59.5, you no longer have to pay an early withdrawal penalty for these funds. 401k catch-up contributions. Though not many take advantage of this perk, those over 50 can contribute an additional $7,500 to a 401k for 2023, bringing the total allowable contributions for the year to $30,000. Contributions to traditional 401k plans are pre-tax dollars, lowering your taxable income while helping save for retirement. This catch-up contribution limit is also applicable for 403(b), SARSEP, and 457(b) plans. FYI, reducing your tax bill is just one way to save money as a senior. We highly recommend visiting our Guide to Finance for Seniors to learn about other savings and financial advice you might be missing out on. Simple IRA or Simple 401k increased limits. Adults age 50 or over participating in a Simple IRA or Simple 401k can bank an extra $3,500 into their account. This bumps the total annual limit from $15,500 to $19,000 in 2023. These simple plans, formerly known as Savings Incentive Match Plan for employees, are offered by small business employers. When you turn 55. Higher HSA contribution. Those 55 and older can contribute $1,000 more to their health savings account, HSA, than younger people as a catch-up opportunity. These contributions are tax-exempt and can be used for most medical expenses. There are no income qualifications for an HSA, though you must be enrolled in a high-deductible health insurance plan, HDHP, when you turn 65. Higher standard deductions. Those aged 65 and over get their taxable incomes lowered with a larger standard deduction. This increase in deduction is based on your filing status and age. For example, the standard deduction for a person under 65 and filing single is $13,850. For individuals age 65 and over, the standard deduction jumps to $15,350. Since over 90% of people take the standard deduction instead of itemizing, this is a deduction almost everyone can take advantage of. Higher tax filing threshold. The minimum income that triggers a need to file a tax return at all is higher for those 65 and older. Your filing status, age at year-end, and gross income determine the income threshold. For example, a single person 65 or over would only need to file a return if the gross income was over $14,704. For a married couple filing jointly, both aged 65 or older, the threshold is $28,700. Tax credit for the elderly or disabled. This tax credit directly lowers the tax bill by between $3,750 and $7,500 for those who qualify. People 65 and over can be eligible if they meet income restrictions. For someone filing on their own, income must be less than $17,500 and total taxable Social Security benefits below $5,005, but there are different limits for different filing statuses. People who have retired on permanent disability may also qualify for the tax credit. This tax credit is difficult to qualify for and can be confusing. To see if you are eligible, go to the IRS website and use their online tool. Property tax exemptions typically apply to those over 65. Many states and cities give seniors special exemptions on the value of their homes. These exemptions vary depending on where you live, state and county, but the property needs to be your place of residence, and many places stipulate how long you need to have lived there. The exemption for those age 65 and older in Ohio, for example, is up to $25,000 of the home's market value, provided your annual income is less than $36,006. Credits and deductions for everyone. Medical expense deductions. Most medical and dental expenses, including long-term care insurance, qualify for a deduction if the total amount of those expenses is more than 7.5% of your adjusted gross income, AGI. You need to itemize your deductions rather than take the standard deduction for this to apply. Wondering which types of medical expenses you can deduct? Alison Flores, Principal Tax Research Analyst at H&R Block, tells us that deductible medical expenses include amounts paid for the diagnosis, cure, mitigation, treatment, or prevention of disease. Did you know? Medicare doesn't pay for dentures or hearing aids, but these costly purchases can be claimed as a deductible medical expense. Business deductions. Many older adults leave company roles to work full or part-time for themselves. When running your own business, there are a lot of tax deductions to take advantage of, including equipment, a home office, and travel. If you spend more than you earn, which can happen when first starting out, you can deduct that loss from your other income sources. Did you know? If you're self-employed with a net profit for the year, you can claim your health insurance premiums such as Medicare, Medigap, and qualified long-term care insurance as a health insurance deduction. Qualified charitable distributions. After age 72, 70 and a half for those who reach this age before January 1, 2020, annual withdrawals are required from traditional retirement accounts. If you do not need the money but want to avoid a penalty fee, qualified charitable distributions, QCDs, are a viable solution. With QCDs, you can donate money directly to a charity from your IRA, avoiding income tax on that withdrawal. A single person can contribute up to $100,000 tax-free each year, and you can take advantage of this even if you are taking the standard deduction 7. If you want to itemize your deductions, Alison Flores from H&R Block has a few tips. If you make charitable donations, one consideration may be timing larger charitable donations with years you have larger medical expenses to increase the likelihood you will benefit from being able to itemize deductions, Flores notes. Ask your tax professional for assistance in determining whether you should itemize and how many medical expenses you'd need to reach the 7.5% AGI floor. Charitable contributions. Giving back has many benefits. If you itemize your taxes, you can typically deduct up to 60% of your adjusted gross income through charitable donations. However, this percentage may be lower depending on the organization and type of contribution. Charities must be paid to qualified organizations like churches, non-profit schools and hospitals, and war veterans groups. 8. Mortgage interest. The home mortgage interest paid on the first $750,000, $375,000 if married filing separately, can be claimed. In order to benefit from this deduction, you'll need to itemize your tax return. 9. Sale of home. Are you considering selling your home? Many older adults opt to downsize or move into a retirement community during their golden years. Taxpayers may qualify to exclude all, or part, of the sales profit from their reported income. The maximum exclusion for single or married filing separately is $250,000. Married filing jointly or widowed is $500. 00010. Many older adults living on a fixed income struggle with debt and tax bills. I hope you like this video. Please follow and subscribe to my channel. Source: seniorliving.org. Thanks for watching.